Hey everyone, welcome back to the channel. It's that time of the month again. We're diving into the latest Harvest High Income Shares distribution announcements for December 2025, with those payouts hitting your accounts in early January 2026. You know, after all these years helping folks across the US build real, sustainable income streams in their portfolios, I still get that quiet excitement when these updates drop. Because in a world where everything feels so volatile, markets swinging, headlines screaming, there's something profoundly grounding about strategies that just deliver consistent cash flow month after month. It's like planting a tree that keeps bearing fruit even when the storms roll in. Let me start with the one that's closest to my heart, the Core Diversified Fund, HHIS. It's holding steady at 27 cents per share this month. Think about that for a second. It started at 25, crept up to 26, and now it's been sitting comfortably at 27. In my own portfolio, this is still the biggest position, the one I lean on when I want that balance of quality companies and reliable income from covered calls. It's not flashy, but man, it's resilient. Have you ever noticed how the steadiest things in life, good friendships, solid habits, are the ones that compound over time? HHIS feels like that in investing. Shifting gears a bit, there's some real brightness in sectors that are shining right now. Take the Agnico Eagle Enhanced Fund. That's the Canadian gold miner play. It just jumped a full 5 cents, from 20 to 25 cents monthly. Gold has been on an absolute tear this year, hovering around $4,500 an ounce, up over 70%, one of the strongest runs since the late 70s. A client of mine, retired engineer out in Colorado, texted me last week saying, "I never thought I'd be excited about gold again, but here we are, central banks loading up, geopolitical uncertainty lingering, and this boost feels earned." Apple got a nice little bump too, up 3 cents to 17 cents. AAPL's been steady around 270 to 275 lately, powered by those AI features and strong holiday iPhone sales. It's a reminder that even the giants can keep generating premium when volatility stays just right for those covered calls. On the flip side, and I always want to be straight with you, there are a couple adjustments downward. Coinbase funds saw small trims. The unleveraged one down to 25 cents, leveraged to 35. Nothing dramatic, just reflecting crypto volatility cooling off a touch as Bitcoin trades in that $85,000 to $90,000 range. But the big conversation, as always, is around MicroStrategy. MST, the leveraged version I personally keep adding to every week, dropped from 35 cents to 20 cents. The unleveraged MSTY went to 15 cents. Look, this wasn't a shock. MSTR stock has pulled back to around $160 to $170 levels after the wild ride earlier. And with implied volatility coming down from those sky-high peaks, the old payout just wasn't sustainable. An 84% yield? Come on, we've all seen what happens when things get too good to be true. Now at around 48% annualized on the new rate, it still feels elevated but more grounded, especially with MSTR's VOL sitting higher than Bitcoin's, around 70 to 80%. I want you to really understand this. Covered call strategies thrive on volatility. When it spikes, premiums explode and distributions soar. When it normalizes, like we're seeing now in parts of crypto, you adjust. It's not failure, it's discipline. One of my longtime viewers, a teacher from Texas, shared with me how these dips taught him patience. He said, "It forced me to focus on the long game instead of chasing highs." That's the deeper lesson here. And with the Feds signaling more easing ahead into 2026, likely bringing rates toward 3%, these high-income covered call products become even more attractive. Lower rates mean investors hunt for yield, and strategies like Harvest deliver it without forcing you to bet everything on pure price appreciation. If you're holding any of these or thinking about it, do yourself a favor and watch that recent Q&A with Harvest's CEO and CIO. It's gold. They break down exactly how they decide these moves, dispel the noise around MST, and give you the confidence that comes from real transparency. As we wrap up another year, I'm just grateful to share this journey with you. Markets will always ebb and flow, but building income that shows up reliably, that's the quiet power that changes lives. Drop a like if this helps, tell me in the comments what you're holding, and I'll catch you in the next one. Take care, stay steady out there.